Hey guys, welcome back to another week of fundamental analysis. This is week number 2 in January 2025. I still haven't got any trades on, but we are doing our analysis. I'll run you guys through it this year. I do want to make a bit more videos, trading content. I'll obviously still track my week-to-week analysis, my trades, things like that. But this year will be the year we start to get the ball rolling. So let's go through 6th of Jan to the 12th of Jan. Just a reminder, guys, that this is not financial advice. This is just my analysis of the markets for week to week. Please, do your own research and, invest properly or, trade properly. So COT reporting. COT reporting for the Christmas period was a little bit weird, a bit all over the place, but nevertheless, you guys can see that the dollar's actually, for the last 2 weeks, bullish, right? Slightly on the 24th and 1% on the 31st. You guys can also see gold is heavily, in long-term perspective, heavily bullish. It's also got a 1.43% change into the long direction. So just very interesting to see where people are putting gold. In terms of Aussie, which I am trading, slight bullish bias change, and the yen, you guys will see, is for the previous 2-3 weeks have been selling off. So something to keep in mind. You guys will see towards the end on the pairs I'm trading what my mindset is using the COT reporting. US data this week, we had NFP week, so the first Friday. We had average hours being as expected, so a neutral reading. We had services PMI actually being bullish more than expected and higher than the previous reading. And then we had NFP, JOLTS, job openings, and unemployment rates all being quite bullish in terms of the readings, all being higher than expected. NFP being revised last month, but you guys can see USD in terms of my verdict for inflation, economic activity, manufacturing and services PMI, and labor market, all very, very bullish, a lot of green. So I'm very, very bullish on the USD. Aussie, we did have 2 reporting. We had CPI reading for year on year, and we had retail sales. Retail sales lower than expected, CPI higher than expected. In terms of how this would affect things, you guys can see with the Australian economy, it's actually not doing too well. Bearish on GDP, consumer confidence, and retail sales. So I'm not confident in actually trading AU long. Although we had a bullish reading on CPI, I'm not confident in trading AU long. I would consider AU shorts, but for this week in particular, because of the COT reporting, I'm preferring just to sort of stay on the sidelines for anything Aussie related. Yen, we are including the yen now as a potential currency to trade. UJ does have a setup that might present, so we'll put this week's data in terms of consumer confidence, retail sales, and average earnings and household spending, sort of a mixed jumble for the yen. It is slightly bullish in terms of CPI, but if you guys are aware of sort of how Japan is doing right now, the inflationary and rates side of things, you guys can see they aren't hiking rates, and they were actually, look, to be honest, it actually was a rate hike because they were negative on their policy rates before. But yeah, Japan's not really doing too well, and from the COT reporting, I'm just, I have a bearish bias on the yen. Okay, so in terms of what's actually changed from our graphs, nothing changed here. You can see Aussie inflation coming down. Okay, we have ISM PMI. Still above that 50 threshold, so still in expansion, and this month's reading higher than expected and going up. So very, very bullish for the USD. We have average hourly earnings, slight dip in the average hourly earnings as expected from the forecast, and still, well within a nice expansive region, considering USD has the highest GDP rate right now. So happy with that reading. It's a neutral reading from that end. Aussie retail sales, you guys can see, steadily climbing up, but still not as expected, not as the forecasted 1%. So still, you would think bearish reading, and this did get revised down to 0.5 compared to 0.6. So overall, the retail sales was a negative or a bearish reading. NFP, I should have highlighted that. You guys can see increasing trajectory. This was the Boeing strike that month, so I'd sort of take that out of the picture. But increasing NFP, more people being on the payroll. Job openings starting to climb up as well, which is good, and that's after the rate cuts, the minor rate cuts in the last couple months, and unemployment rate, at least from the previous month, coming down more than expected. Very, very good signs for USD. Cool. So this week's data, look guys, I did have this written in detail. It didn't save, so I'll just briefly run through. Final services PMI, although it was cooler than expected, the actual reporting was quite bullish. It said that it was, I think it was the first time employments were up or something like that. And it's still in expansion, things like that. So it was actually a very bullish reading on that reporting, although the forecast is a little bit lower. I'm still overall bullish for services PMI, especially with ISM services PMI being higher than expected or hotter than expected. You guys can see we did mention Aussie has CPI year on year a bit hotter than expected, and that is kind of questionable and concerning because the Aussie economy is not doing too great, and our rates still we have not had one rate cut since I think like a year and 2 months or something like that. So quite concerning. Still elements of inflation. We do have, I think we have a rates meeting in the next couple of weeks, so it'll be very important to see what people say about it. FOMC meeting minutes, well, there was a lot of participants and candidates pretty much stating inflation being sticky. I don't have the words on top of my head, but inflation being still an issue, expecting less rate cuts, and if we do get rate cuts, a smaller amount. So you guys can see the whole concept of stagflation still being in play because we do have very strong readings for the US labor market and spending and economy. They might, the Fed might not want to cut rates, and if we don't get any rate cuts, we're looking at stronger US dollar, weaker indices, just because things are more expensive, less borrowing, and gold could be. Look, gold would be better. It would be beneficial to have gold with rate cuts, but the whole stagflation concept, I can trade that long from a fundamentals point of view. Next week's data, very key. We have PPI and CPI for USD. Again, just indications of how inflation is going. If inflation is coming down, then we can expect more rate cuts this year. But if it's still sticky, then I'm happy to trade gold long. Retail sales as well, just as an indication of how spending is in the USD. And we have employment change for Aussie, which is again key because inflation's sticky. We haven't had rate cuts in our area for EU plus, and if employment is worse than expected, then we might have to cut rates because the labor market's cooling. So my biases, gold, I've written the whole stagflation concept is even more evident now, so happy to trade long as long as the setup presents, especially with COT reporting being bullish for gold. USD, or US 30, sorry, labor market readings doing well. Rate cuts are being questioned by members of the FOMC board. If we do not get rate cuts as previously predicted for 2025, then indices will not be projected to do well. Higher rates, less borrowing, less spending. So US 30 for the time being, I'm just not going to trade for this week. AU, we said Aussie has some signs of bullishness from the CPI reading and retail sales reading and COT reporting. So right now AU will just stay on the sidelines. UJ is a better pair to trade. We have really bullish USD. We have signs of bearishness for yen with the COT reporting. So happy to trade US JPY long. So that is the analysis portion done. Let's look on the charts. So let's just start with the dollar index. And guys, I am doing this on my Mac now, so things might be a bit slower, but I want to keep everything on the one system and edit on my Mac. So you guys can see USD still climbing up. Dollar index, we do have this area here of support sort of getting bounced up and rejected. Looks like we're still in a bull trend. So I'm happy to trade US Forex pairs into that direction. AU still going down, right? We said there might be some signs of bullishness for the Aussie, which might come into that resistance area. And if it does, then at that time, if I do have indications from a fundamentals standpoint of bearishness coming back into the Aussie, then we can trade that down short because of the overall bear trend. UJ though, UJ is setting up quite nicely. We know UJ had this little pullback hit as COT reporting and people that, you know, big money started longing the yen. But as you guys can see in the last 2 months, in the last month, so in the month of December, we have been going back to that long position for the USD over the yen. And we can, if price does want to come back to here, I've just popped this in just because it was a potential trade that I just wanted to see play out. Stop loss will just sort of keep under here still. But if price does want to come back to here, I've got a signal here that we can potentially go long again here. Not again, but for the first time, and see how that plays out, depending if we get a good reversal signal or a signal, our candle to indicate we can get in. Gold right now, look, I'm gonna say we can trade it as long as it hits our area here. So I'm gonna add an alert here. You guys can see gold just did reject off this area, so I think it might climb higher. But look, if it does come into this 4-hour resistance here, we might get in depending on the candle. We are in, from a daily point of view, we are in this range. So look, the setup's there. In the last month it has been, actually no, a bit earlier than that. In the last 2 weeks it has been bullish. We have COT backing, we have fundamental backing. If you guys look, at the end of the day guys, if you have evidence to take the trade and it sets up on a technical basis, just, you know, take it. Because at the end of the day, trading, you do need to take risks, and if it presents, things don't present always, so when it presents, don't hesitate. Even if you're on a loss streak, if it fits your criteria, and if you lose that trade, it is what it is. From a trading point of view, you've done the right thing, even though financially, you know, that loss you will definitely take. Now, just briefly touching on US 30 as well, you guys can see US 30 is range bound, coming into this area of support, but the only reason why I'm not taking this daily support trade is because there has been some indications of potential rate, less rate cuts, and that's not good for indices. So I'm just going to stay on the sidelines for the time being. So that's pretty much it for the week, guys. I will speak to you next week. I am going to film another maybe 2 videos today regarding trading, so just regular trading videos. Please, if you guys are enjoying the content, you guys can go through all my old content, and again, those were kind of shitty. It was filmed shit, but it's there just to show my journey. And yeah, 2025 definitely going to be profitable and earning money this year. I have already put $10,000 into account, and look, the risk I'm going to do is $500, and that's 5% on the account, but you know, in terms of the money I have, that's 1%, so or around there. So yeah, subscribe, like this video, guys, watch my other videos. I'm going to start posting on Instagram, TikTok, YouTube Shorts. really try and blow up this year. The goal is to get 200 subscribers by this year. So if we can make that happen, I'll be very happy. Peace.